Welcome to FXtech's comprehensive USD/CHF analysis for the week of October 6th through 11th, 2025. In this presentation, we'll examine the critical technical levels, market dynamics, and trading opportunities in the USD/CHF currency pair. The Swiss franc has been showing interesting price action against the dollar, and we're at a potential turning point. This analysis draws on data from 5 leading financial platforms to give you the most complete picture possible. Whether you're a short-term trader or looking at medium-term positions, this report will help you navigate the current market environment. Let's dive into the details and see what the charts are telling us about where USD/CHF might be headed next. Our analysis synthesizes insights from 5 premier financial platforms to ensure you get a comprehensive view of the USD/CHF market. TradingView provides us with real-time price data showing USD/CHF at 0.79918 CHF, down 0.89% on the day. Investing Live, formerly known as Forex Live, offers expert technical analysis focusing on key support and resistance levels. Action Forex contributes weekly market outlooks highlighting the significant break above 0.8013 resistance and sustained trading above the 55-day exponential moving average. Forex.com delivers fundamental analysis based on central bank policies and global risk sentiment. Finally, Daily Forex supplies daily technical analysis from Christopher Lewis, emphasizing the bullish momentum building in the pair. By combining these diverse sources, we ensure our analysis is well-rounded and actionable. Let's examine the current market data from TradingView. As of October 10th, 2025, USD/CHF is trading at 0.79918 CHF, representing a daily decline of 0.89%. However, this single-day weakness needs context. The 5-day performance shows a positive return of 0.33%, indicating overall upward momentum for the week. The 1-month performance is essentially flat at plus 0.03%, suggesting consolidation. Looking at longer timeframes reveals the pair's challenges. Down 2.44% over 6 months, down 11.84% year-to-date, and down 6.68% over 1 year. The days trading range between 0.79887 and 0.80705 demonstrates significant volatility. Technical indicators are showing neutral readings across both oscillators and moving averages, suggesting the market is at a critical decision point. Action Forex's weekly outlook from October 11th provides crucial insights into the pair's technical structure. USD/CHF's rebound from 0.7828 has resumed by breaking through 0.8013 resistance, shifting the intraday bias back to the upside. This is a significant technical development. Sustained trading above the 55-day exponential moving average at 0.8004 suggests that the rise from 0.7828 is correcting the entire fall from 0.9200. If this level continues to hold as support, the pair could target 0.8170 resistance and possibly beyond. However, caution is warranted. Risk stays on the upside only as long as 0.7944 support holds. A break below this level would call into question the sustainability of the current rally. The long-term downtrend from the 2017 high of 1.0342 remains in progress. Christopher Lewis's analysis for Daily Forex on October 10th presents a compelling bullish case. He notes that the US dollar rallied during Thursday's trading session, showing renewed strength against the Swiss franc with a bullish candlestick formation. Lewis emphasizes that USD/CHF offers the most runway for continued upside movement compared to other dollar pairs. He's particularly focused on the 0.81 level as a critical breakout point. If the pair can break decisively above this level, Lewis suggests the dollar could start to take off, potentially targeting the 200-day exponential moving average near 0.82575. On the support side, he identifies 0.8 as a key area where short-term pullbacks should find buying interest. Importantly, Lewis notes that both currencies are safety currencies, so USD/CHF might not rally as aggressively as dollar pairs against other currencies. Understanding the critical technical levels is essential for trading USD/CHF effectively. On the resistance side, we have 0.8000 as a strong psychological barrier reinforced by the 50-day EMA. The 0.8004 level represents the 55-day EMA, critical for confirming a trend change. We've recently broken through 0.8013, which was the recent high. The next major psychological resistance sits at 0.8100, which Daily Forex identifies as a potential breakout trigger. Beyond that, 0.8170 represents Action Forex's target level, and the 200-day EMA at 0.82575 marks a major technical achievement if reached. On the support side, 0.7944 serves as key short-term support. As long as this level holds, the risk remains on the upside. The 0.7828 level represents the recent low and the starting point of the current rally. These levels will guide our trading decisions. Let's discuss practical trading strategies. For short-term traders with a 1 to 2 week horizon, the bullish entry strategy involves waiting for pullbacks to the 0.8000 to 0.8020 zone, which should now act as support. Target the 0.8170 level initially, with a secondary target at the 200-day EMA near 0.82575. Place stop-loss orders below 0.7944, offering a favorable risk-reward ratio of approximately 1 to 2.5. For those anticipating a pullback, a bearish strategy could be considered if the pair fails at 0.8100, but only with clear reversal signals. For medium-term traders looking 1 to 3 months ahead, we present two scenarios. The bullish scenario, which we assign a 55% probability, assumes a break above 0.8100, targeting the 0.8170 to 0.8250 range. The bearish scenario, with 45% probability, would be triggered by failure at 0.8100 and a break below 0.7944, targeting 0.7700 to 0.7828. Several key factors are influencing USD/CHF and will likely continue to drive price action. Federal Reserve policy remains critical, with recent economic data supporting expectations of a relatively hawkish stance compared to other central banks. Any shifts in Fed rhetoric could significantly impact the pair. The Swiss National Bank's approach to monetary policy and potential currency intervention continues to influence the franc. The Swiss National Bank has historically been willing to intervene to prevent excessive franc strength. Global risk sentiment affects both currencies as they're both considered safe havens. U.S. economic data, including employment reports, inflation data, and GDP figures, will influence Fed policy expectations. U.S. political developments, including concerns about potential government shutdown, could impact dollar sentiment. Finally, geopolitical developments and their impact on global trade remain important background factors that can drive significant movements through their effect on risk sentiment. Let's consider the risks to our outlook. Upside risks include a surprise hawkish shift from the Federal Reserve, easing of geopolitical tensions reducing safe haven demand for the franc, stronger than expected U.S. economic data, and improved global risk sentiment. Downside risks include U.S. government shutdown concerns, escalation of global trade conflicts, a more dovish Fed shift, and potential SNB intervention. Trading discipline is crucial. Always use stop-loss orders with maximum 2% risk per trade. Adjust position sizing based on volatility. Stay informed about central bank announcements, and remain flexible to adapt as conditions evolve. In conclusion, USD/CHF stands at a critical juncture. The 0.8100 level emerges as the key battleground. A decisive break above would likely attract additional buying, while failure could lead to renewed selling. The long-term downtrend remains intact, so caution is warranted. Trade wisely, manage risk, and stay informed.